Okay, so again, welcome to today's webinar, and topic today is profiling the markets. Okay, I know Patrick had already gone through the disclaimers, but I would just like to reiterate it on my end here that trading futures and options is speculative in nature, involves substantial risk of loss. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Again, past performance is not indicative of future results. So, um, let's get right into it. Who is this guy? Who am I? All right, I see a lot of familiar names and many new names as well. So, who exactly am I? I'm a 30-year trading veteran. I've traded at the investment banks and various hedge funds, primarily as a market maker, and that's my background in terms of trading listed stocks, Nasdaq stocks, as well as futures and various derivative products. Main firms that I've worked over the years, the old Shearson and Lehman Brothers, they're of course no longer in existence. United Bank of Switzerland, UBS, and as I mentioned, a few high frequency funds. So as a market maker and listed in Nasdaq stocks, um, we simply, as a market maker's job is to maintain a bid and an offer, all right, throughout the course of the session and all price points. Index futures, derivatives, and of course I've been involved in portfolio management, which is just a natural offset of what we do as market makers. Okay, so that's who I am. I want to get right into the topic today because there's a fair amount to cover in terms of background and basics, and I want to get to the charts with using the Sierra platform. And again, for those of you that just joined us, Patrick did a great workshop yesterday on the market profile and various aspects of market profile through Sierra chart platform, and that's the main platform we use here at Polaris. And I believe that recording, that workshop has been recorded. So definitely take a look at yesterday's workshop that he presented. It was fantastic. I was there, and I'm always constantly learning, new things myself. All right. Okay, so let's move into it. So before we get to the basics of market profile, we just want to give you a little bit of background history. And again, a lot of this is well documented out there, but in terms of what we're doing here, market profile was developed by J. Peter Stottlemyre in the early 80s while he was a trader at the Chicago board. And what he was seeking to do was just simply evaluate all this chaotic, what seemingly was chaotic price action. And he thought that, look, there is a better way to organize data than the typical bar chart of the time, and which we still use today. So he wanted to evaluate, what was value, okay? And again, going back, it's really nothing more than a graphical organization of data, all right, time and price in this case. There are other, during your school years, you've probably learned, you've probably taken a statistics course where you've learned about, normal distribution curves and things like that. Again, no matter what data set that you're evaluating, you want to evaluate, what's the norm, okay, of the data set, what's the abnorm, what are called tails. And normally the data set will be, distributed in certain ways, okay? So in terms of what we're looking for in market data and trading, stocks or indices, anything that can be charted like that, is we want to get a better understanding of who's in control. Okay, when we get a better understanding of the activity that's unfolding, that will give us some clues as the dominance of the powers out there. Okay, again, we want to always be trading from the side of the dominant force, and that force, like waves in an ocean, kind of shift back and forth. All right, and so we want to, by having an understanding of how the price action is being distributed, we can then make assessments on who is controlled, and then certainly we don't want to be on the wrong side of that. All right, so normally, as the picture depicts here, a distribution, what's called a normal bell-shaped distribution, is called a Gaussian statistical distribution. Okay, simply where 68 to 70% of the heaviest compression of activity, whatever data set we're talking about, so we're talking about stock or futures prices here, is distributed around 34 on the left side to the right side of the highest peak of volume, and that simply is what's referred to as the value area. And then beyond that, you go into the realms of 1 standard deviation, 2 standard deviation, 3 standard deviations, and so forth. And as you can see, in a normal distribution, okay, everything is, equal on the left side of the distribution as it is on the right side of the distribution. And simply the profile allows for us, it's a decision support tool. Okay, it is not a tactical, okay, to buy or sell. We'll get into that in other aspects of the different tools that we use, but it does provide an understanding of where the fairest value of prices and how they're distributed. Okay, again, when you go shopping at the store, all right, think about, the price points, grocery stores or shopping retail stores for clothing and so forth. You probably naturally know whether you're paying too high or if it's a value. Okay, and so, and you know that intuitively because you've been, shopping over and over, daily, weekly, and you see the prices, how they fluctuate, but you may not really realize that what you're actually doing intuitively is forming in your mind some sort of a distribution of price points, where you walk in one day and say, wow, this product is on sale and I haven't seen this price low in such a long time. That's a value. I'm going to buy that. Okay, and then next time you go to that same store and you see that same product, and for whatever reason it's 2 times, 3 times higher, and you say, well, no way, that's way overvalued, so I'm not going to buy that. Okay, so you already naturally are doing this, you just may not know it. All right, so one of the advantages of market profile is it allows us to improve our trade positioning. And again, similar to what I just described, we want to buy the futures. So if we're talking about S&P or crude oil or whatever your contract that you're trading, we want to be able to position ourselves, be on the side of, we all like to buy value. We all like to buy something that is of relative cheap value. All right. That said, we need to know how it's distributed and what the action of those buyers and sellers are doing. So this is a great way of taking a lot of chaotic data and organizing it. Okay, so that is the ideal Gaussian distribution. But as we all know, life is not so clean. Okay, so again, just as a review, we're going to take a look at the theory versus what actually happens in reality. All right, the theory is that the market's daily organization is simply determined by time, price, as well as volume, and there is a difference between market profile and volume profile. They are very similar, but there is a difference in construction. We'll actually take a look at both today. All right. So based on the normal quote-unquote Gaussian distribution, as we just mentioned, okay, the value area is represented by 70% of the daily prices that have occurred, and that is what's considered 1 standard deviation. Okay, so as you can see in the graph there, the theory is that it's a normal, nice, sloped, symmetrical Gaussian distribution. The reality is it's normally nowhere near that. Okay, there are some days where it does mimic that, but most of the time there's some kind of variation away from that. So in reality, if the buyers are strong one day, or if the sellers are strong one day, okay, the reality is the distribution is going to be skewed, okay, to one of the sides. All right. So that is how it unfolds. Let's get into some of the construction of it. all right, and we'll get a better understanding of how it's actually formed, okay? So speaking of market profile, so market profile is how it's originally constructed was a lettering system, and simply, A, B, C, D, and each of those letters represent 30 minutes of high-low range data. Okay, so it's an alphabetical sequence, and just speaking about the day session, cast session only, it goes through ABC all the way through end period. All right, um, they're called time price opportunities, or TPOs, and it's simply the reason for that is they're looking over the XY axis, so time, okay, versus price, and how much time is being spent at each individual price point during that 30-minute period. Okay, so in terms of each column there, the high-low range of the first 30 minutes, okay, prices will obviously auction up and down through that range. And then as the next period overlaps that, okay, it's this overlapping effect that you'll see congestion. All right, as you can see here on the first what's called market profile breakdown here, you can see how the lettering here begins to overlap. So as this overlapping happens, this develops or forms that value area high point, value area low, and then what's called the point of control, which is the highest TPO count. All right, so that's the highest single point price of value within the context of this high-low range. Okay, and again, this high-low value range is that's where 70% of everything has traded. Okay, and as you can see, this is this is just another depiction of how the distribution in a normal Gaussian fashion unfolds. So prices that are above the upper part of the value area, okay, so prices above value would be deemed unfair prices, okay, and prices below the lower part of the value area would be deemed unfair prices. So going back to that grocery store example, all right, and for whatever product that you're purchasing, if you go there and you find that the prices are down below the normal area, the lower part of the normal area, what is your reaction going to be? All right, I can almost predict it, if not predict it. I'm going to say, all right, that you're going to go in and buy that pretty aggressively. Okay, right? You're going to buy that. All right, and then on the flip side, okay, as a buyer, all right, as a consumer, when prices reach a higher level, you're going to simply say, nope, it's too high. So you're going to, in your mind, intuitively say that's unfair. All right, and then the store may run a special, and that price may be somewhere within this 70% area. And you're going to say, okay, it's not overvalued, nor is it undervalued. Okay, fine, I'm going to buy some, and you'll buy that all day long. Okay, every time you go there, it's within that certain range. Okay, I'm buying that. So that's what happens here in the marketplace. The market is designed, is working to auction prices higher, auction them lower, to find fair value. Every day the market is in search of fair value. Okay, and when markets get out of fair value, out of balance, in a sense, okay, they become unfair, or the market, new information may have entered into the marketplace collectively around the world, right? And those investors, portfolio managers, hedge fund traders, day traders, everybody, retail, may decide, look, the new information that we have, whether it's about interest rates or something, of that, they're going to say, you know what, I think the prices now are currently undervalued. We want to be an aggressive buyer. And so all of a sudden, collectively, the market starts bidding price up, and then the market, turns from a balanced fair value zone into an unbalanced area where markets tend to trend in a direction. Okay? But again, what is actually happening is that those participants are seeking a new balance of value. They believe it's either undervalued currently or overvalued currently, again, based on that information that they've received or determined, and then they're going to act accordingly. Okay? That's the function of the auction, of the markets, is to simply define where there's fair value. Okay? And again, that takes place obviously daily. We can look at it from a micro viewpoints, intraday, all the way up to the weeklies, monthlies. All right, and we'll take a look at a couple of those in a few minutes. So, and then the last concept here on the basic instruction is the initial balance. All right, and that's the term that everybody uses, and it simply represents the first hourly high-low range, or the first A-B period. Okay, and what this also represents is the range, and again, that range can certainly vary every day, and the differences in how the initial balance forms gives us some insight into what the large institution, mutual fund type buyers and sellers, okay, are thinking. All right, collectively activity. Remember, as each price point and everything, and each a piece of contract trades, we're not trying to, hey, what does that guy know? What about this guy? This guy's buying it, that guy's selling it. Okay, we're not trying to micromanage using this type of approach. All right, we're trying to take a broader paint stroke and looking at the market, from a bit of a distance. All right, not so up close, and then look at and say, well, how is the first hour trade being distributed? Are there some patterns there? And again, as with all the various patterns many of you have studied over the years and continue to study, there are patterns here within market profile as well. That in and of itself is subject for an entire workshop, the individual patterns, so we won't cover those today. But moving forward, I do want to cover a couple various day types, and these are day types that are typical. We don't know, at the beginning of each day, we don't know what type of day type is going to unfold. We don't know if it's going to be a non-trend day or a trend day or a neutral day and so forth, okay? But, there are, as these types of days unfold and as you learn more about the various day types, okay, you'll gain some, some insight. So on the first one here to the left, the non-trend day, simply it's defined by a relatively narrow range. I believe we had pretty much one today, narrow range with wide profile, wide profile ends, and there's a lot of kind of congestion in the middle. All right. There's no real, you can see that the auction goes up on one period, down the next, up the next, and so forth, and there's a lot of overlap, there's a lot of congestion. This is like being in rush hour traffic. You're not going too far on this particular one. On a normal day, okay, if there is a normal type day, what happens is the profile begins. There's a lot of activity during the early trading hours, that first range we spoke about, the initial balance high-low. So there's a lot of activity going on there. And again, it could be a fairly wide range, or it could be a relatively narrow range. But there's a lot of activity going on within that first hour. Okay, what this simply implies, now there's different types of traders in the market. There's naturally a day trader, okay, so at win, lose, or draw at the end of the day, we're all going to be flat, no positions. And then there's everybody else is what's considered a other time frame trader. And that other time frame trader could be anybody from a swing trader up to the large, big institutional account. Those are the type people, especially those large institutional accounts, they're the ones that we really want to, kind of get an idea of what they're doing, okay, what their intention is, collectively, not individually, because we can't do that. But if we have an idea of from their actions in the marketplace, then we can make some inferences as to what the next, potential move is in market. And by understanding some statistical ranges that have occurred in the past, we can again make some very accurate assumptions about what range extensions will be. So in terms of a normal variation day, we have again that first initial balance, and then the market, the other time frame trader, the bigger institutional guy, comes into the marketplace and says, okay, I want to sell these, all right, for whatever reason, all right, I want to sell these. And so it simply implies that that OTF, the other time frame trader, has entered the marketplace, and we're moving prices away from the initial balance zone, all right. Beyond that, again, what some of the inferences, all subject to to different. Now, what I try to do in our trading room, I think I do a pretty successful job at it for our members, is that early on I try to identify, and this is certainly a skill that we all need to somewhat develop, but I want to try to identify how the day type is unfolding. Is it a non-trend? Is it a neutral day? Is it a trend day beginning? Yesterday, was a trend day. Okay, was it yesterday? Yeah, yesterday was a trend day. It's actually started off as a very neutral day, or excuse me, it started off as a non-trend day. It actually turned out to be a trend day, and after a period of time. So some people would actually perhaps even consider it a normal variation of a normal day, but in either case, it doesn't really matter a whole lot. What we want to do is we want to get the direction right. Okay, looking back at the end of the day or later on, saying, "Oh yeah, that was a non-trend day," or that was a trend day. Well, that's great, but it doesn't help us at the end of the day. So one of the skills, and again, this takes time. All right, and effort and practice and constant review. But if you are persistent with it, okay, you will learn very slowly, all right, and methodically. And again, this is what we present throughout the course of our day. Every morning, and I'll show you what we do when we start our day shortly. But we start off and we review the bigger picture, and then we drill down into our what our game plan is for each day. So again, just kind of moving along, you can kind of infer a neutral day. That neutral day, as you see in the middle snapshot there, looks like a normal distribution curve, doesn't it? Okay, just like that Gaussian distribution. So a neutral day actually is more representative of a normal day. Okay, yeah, all these are 30-minute TPOs, correct? Yes. Okay, using the market profile format. And then, of course, the trend day is very simple, elongated. Okay, there's not any single point. There's a lot of single prints. All right, so here on the fourth snapshot over, J period here, there's a lot of single prints. That means there was some congestion between F, G, and H and I, and then prices rotated away from that area, and there's a lot of single prints. So trend day action. Very elongated. And then a variation of a trend day is called a double distribution day, whereas congestion at the lower end, congestion at the upper end, and in between those areas is a small little kind of a window where prices rotated to the next level. Okay, and again, all these have their own kind of special ways of trading. All right, and again, all subject for advanced type of understanding of various days. Okay, let's just get one more slide in. All right, and we'll get right to the chart. So once we have an idea of the basic construction and the various types of days. Okay, so basically how do the buyers and sellers agree upon price? So of course years ago, all right, in the Chicago pits. Everybody, you've seen plenty of, footage of it, screaming and yelling, a lot of chaos. But in actuality, within all that chaos, there was actually, beauty, all right, within the chaos. And, The buyers would come together. Again, in the little man's depictions here, okay? On the left-hand side, you'll have, this trader thinks contract prices are below value. Okay, so it's the same thing as you going to that grocery store. What are you going to do? All right, you want to, when prices are below what you perceive as value, what are you going to do? I'm going to buy. I'll buy as many as I can get my hands on. All right. Well, but remember, you're not the only one that's thinking that. Okay, others are as well. They're going to be doing the same thing. All right. So what that tends to do is that puts a floor under prices, all right, support, all right, for however long there's contracts for sale, and then once those contracts are exhausted for sale, prices will tend to rotate back up. Okay, this is what's called responsive activity. All right, and the same will apply on the opposite side, on the high end. On the flip side, let's take a look at that institution who has taken all that new information, all right, into their own personal research and analysis, and have concluded that the current price points, all right, in the market they find undervalued. So what will they do? What is their action? Okay. Now again, we're not in the business to predict what they're going to do ahead of time. We're in the business of observing through market generated data to determine what is actually happening, all right, and then by the collective activity of all participants, all right, there is patterns, as I've mentioned earlier, will unfold. So once those patterns become evident, all right, that allows us to assess risk, initiate trades, all right, more effectively, and with higher confidence. All right, we want to be on the dominant side. All right, so today, for those of you that have been trading the markets today, on the S&P, there really was not a dominant side today for most of the day. Today was a relatively kind of a neutral day. All right, and it was more of a responsive type market where the auction moved a bit higher midday, and then sellers came in and then pushed it down to below fair value. Buyers stepped in and kind of gave it a bit of a support. Okay, but on the initiative activity side of the equation, all right, that big institution, other time frame trader, is not believes that the markets are undervalued, and they're going to initiate activity. They're going to move prices above levels. You may want to think of it as breaking out of a range. Right, that would be a typical scenario. And so it's that breakout of a prior known balance zone that creates the imbalance, and then potentially the new directional move. All right, so that is the key portion of the slides that I want to present, and again, I wanted to keep it tight, concise. All right, I want to get to the charts. I'm right on time here, about 30 minutes into this. And I want to certainly leave time for Q&A. All right, I want to show you guys now what we do here on a day-to-day basis using the profiles. Okay, so let's change the view. Okay, so everybody now should be seeing the profile chart. Now, Sierra chart it's just a fantastic platform. All right, they've made tremendous advantages and advancements rather into their displays, and there's a lot of things you can do with the profiles. Patrick, in his presentation yesterday, offered several different examples. What I'm going to show you is simply some of the ways we've kind of combined the data. This is not the only way. Okay, certainly not. There are tremendous number of ways to display this. But this is what we do. What we start off with every morning, of course, I send out what we have, what's called the daily trade strategy. to our members. And if you go onto the website, PolarisTradingGroup.com, the blog section is an archive of all our daily trade strategies. Okay, number one. So each day we begin with a larger overview, and especially on Mondays. So what we did, particularly here, was on Monday, I always want to start with a weekly profile. Okay, so now this is not the market profile letter charts. This is a volume profile. Okay, we'll show the TPO letter charts in just a moment. So a couple of things that are showing on this particular chart, so we at least understand the format. Each particular column is 5 days, day session only, cash session only. Okay, not the Globex. And the green area denotes the value area. The red line is the point of control, the highest volume point on that profile. And the blue area is the standard deviation zones away from fair value. All right, so number one. Number two, on the right-hand side is a cumulative profile. Okay, so as far back as we can go, that's about as far back to be right now, about May 1st, right now it shows. It is a cumulative profile. So what this simply does, as the term cumulative implies, it takes all these profiles and combines them into one here on the right scale. All right, so by doing so, we're able to see what the and these are visible bars. Okay, again, you can also put specific dates in. I prefer to use visible bars because they're much more flexible to what we want to look at as the day unfolds. But whatever is visible, it'll show you what the upper and lower value area zone is by this green area. Everything else, again, is beyond the value zone. And then down below here is what's called the cumulative delta bars, or net change. So you can kind of view this as, the net buying and selling pressure, okay, during each session, or again in this case 5-day period. All right, and then we simply put a 10 period, I believe this is a 10, yep, 10 period simple moving average, so we can have an idea of what's happening over a period of time, rather than, because all these spikes up and these spikes down and spikes up and spikes down. Now naturally, a natural visual here will say that the spikes down are of a much greater intensity, and certainly they have been. All right, although price has not necessarily, we're not in a downtrend, we're actually up at highs here yet again. Yet on average, the 10-day average now is pretty much flattened out, but during that period, 10-period average of weeks, markets have been under pressure. So very simple to do when you go in here. Okay, you can just go in here and change it from weeks, okay, to days. All right, very simple. And then now we can zoom in a little bit tighter and do a little bit more analysis for the current week, the current day, the last 5 days, what happened 2 days ago, and so forth. Okay, so that's where we begin our analysis. And again, each of these, day types, you'll have, you'll see what are called P profiles. All right, P as in the letter Papa. All right, they tend to denote short covering type activity. All right, you'll get some. I think the most common profile is the normal variation day, where you'll get some sort of normal activity, and then the price will try to expand the range outside of the initial balance, first hour high-low. I think that's probably the most common one. True trend days are not as common as one may think, especially in the S&P. They are more common in some of the other instruments out there. And then, in normal profiles, and again, the context of normal is the operative word here. But in normal profiles, the upper and lower edges of the profile tend to taper. So for instance, all right, in this profile here, you'll see that the volume bars here tapered down to nothing. Okay, the volume bars tapered down on the upper side, all right, to nothing. And what that simply means is as prices auctioned lower, right, sellers became less interested in selling those prices. Okay, the selling interest dried up. On the opposite side, as prices auctioned higher, the buyers dried up. All right, there was less interest to buy at those higher prices for whatever reason that day. On the flip side of that is when you'll get a blunt profile. All right, and then this is what's referred to as a poor high or a poor low. And what that simply indicates is that there was a lot of buying pressure up to that point. Okay, there was the opposite side. So the initiative trader was up buying it up into those highs. The responsive seller was selling, everything that was being bid for. Okay, so the buyer had a lot of interest to buy them at those higher prices, and typically the reason for that, most of the time, is simply because they're trapped. They're in the wrong position, and they're either short from much lower, and they have to buy them. They have no other choice because prices are trading, volume is trading, other buyers are buying them, and if they don't buy them, prices may auction even that much higher, and then, again, that will just add to their losses. So typically, a lot of times when you see these blunt profiles is because people are out there are in losing positions, so you can almost make some inferences about what may eventually, unfold. Okay, and then ultimately what did unfold here was when it came back up and tested that area, bingo, we went higher. Okay, so this is where we start. Now, the next profile is a split profile, and this begins to get us into a little bit more nitty-gritty of what we do as we plan the day. And what I'll do in a moment is I'll overlay some of our proprietary levels that we use on a day-to-day basis. So, so what you'll see here on this particular side of the profile here, this is the Globex, so the evening session, all right, profile. And then the morning session, cash opening, is on the right-hand side. Now, these are currently split. What you can do is you can merge the profiles. So if we're going to merge this one, you can merge it here into one and see an entire day, including both Globex, and the day session. And then, of course, you can continue to merge as many as you want to formulate an even larger profile. All right. Now, okay, let's take a look. Now, what I want to show you guys is what we do, all right, into the nitty-gritty. So let me put on a target master. This is one of our StatX zone target masters. So what we do is we highlight key zones, all right, and we look to take our trades from these key zones, all right, and that's where we find support, resistance, based upon not just profile activity, but where we want to look to trade. So today was a big level at the 2122s for us pre-opening. We wrote about that in our daily trade strategy, and we were looking to buy at that level today. So as price auctioned down to that key level, we also saw that the auction failed to go lower, and we were a buyer at the 22s. This morning we were a seller up here against the 31s early in the session. So we use our target master, all right, very effectively along with the structure of profiles. So as you can see here, some of the, and again, these are all proprietary type levels, okay. These levels come into play on a daily basis along with just the normal, unfolding of the auction. All right, now moving forward, all right, we start getting into a little bit deeper now into the various key levels that we have displayed. And as you can see here, we have our profile on the right hand side. So we're going to use that. All right, and again, this morning our what we call our StatX level. All right, you can see here the context of the profile, that tapering that we spoke about a moment ago. This tells us that the buyers up here were not strong. All right, and we were looking for reversal signals. So there's a way of at a key level, key zone, looking for a reversal. We take our short based upon the fact that the buyers here on the profile were not aggressive. And then looking back from the day before, we were looking at also the 22s to the 24s, and this is where the majority of our action took place today. All right, now this is a bigger picture, and we're going to now get into a little bit deeper into exactly what we do. And now our 5-minute chart. And so what we do here on the 5-minute chart is we bring in prior known levels of points of control. Okay, all right, prior points of control, and these points of control are key inflection points for us. All right, and as you can see down here at these 22s, okay, and the prior pivots from yesterday, we were in our trading room today, we were buyers here. All right, these particular arrows here refer to our discount and premium crossover system, and we'll touch base on those in just a moment. But once we have the day type and the day structure as it's unfolding, okay, so down here yesterday, this was a point of control of history of 5 days ago. We had buying yesterday morning at the 17s, and we had a what we call our discount. So this was a buy, straight out buy signal for us. All right, and our members collectively took longs here. As the market started to unfold, we recognized that the market was turning into a more trending condition. All right, and again, discount activity here on pullbacks. These are our entry points. Okay, so we don't want to go chasing after a move, but these are our entry points. All right, now I'm going to move along here fairly quickly. Patrick also introduced in his session yesterday the number bars, and this is something that we're using a whole lot more of, all right, in conjunction with the profiles. And again, once we have the profile day type, and again, today was a more of a normal type of range day, what we do is we overlay the point of control, which simply we call volume trend, the upper and lower value areas, and 2 and 3 standard deviations, so it forms our bands. And now with the number bars, the good thing about the number bars, what we look for, again, these are display imbalances. Now, I'm not sure how many are familiar with the imbalances, but we look for price imbalances, at key levels, and this is a 6-tick reversal chart. So as price is auctioned up into the upper 2 standard deviation level near the 30s, what we're looking for is we're looking for a series of red sell imbalances coming into play. And then we're looking for to tell us that the buyers are the buyers that auctioned price up are meeting responsive sellers, and we're looking to look for that additional weakness for a 6-tick reversal, all right, to shift the column. And then once we do that, once we have that underway, we're looking to simply take our trade. Initial stop goes above the prior column. And then as price begins, to work in our favor, if it does, then we move our stop lower, so we have built-in management along with that. So what we're doing here is, by getting the day type correct in the profile formation, we're then able to take a more active role in how we're going to trade that particular day. All right. And so today was a more responsive day. When it was trading in the middle for the majority of the early part of the session today, there really was not a whole lot to do. Okay, this particular indicator, it comes with AT. Right, it's called the number bars, and everything that you see here in terms of the display is already pre-templated for our members. All right, and there's nothing that needs to be coded. I send out templates to everybody. They're available actually for our members on our website, and I have put together these myself in how we do our business and how we do our trading. So everything here is very complementary to the approach that we use. All right, in terms of using the profile, understanding it, and then applying it. All right. And then lastly, I just want to show you a couple last charts here that we do use. All right. All right. And again, this is a little bit more of a traditional view for many. And this is simply a 1500 tick chart. And with this 1500 tick chart, it also displays these arrows, which is our premium and discount methodology. All right, our trade setups. And again, today, in a more of a range condition, they weren't too active. Yesterday, they performed really well. Okay, so these are all the historical signals that we had on our premium and discount system, as you can certainly see here. Now, these provide specific or suggested entry points, and there is management along with those. All right, so for instance, on an entry here, it would actually be, well, actually it won't show here, but it'll actually show an entry, a stop, and then risk-free levels and targets. Okay, so again, having the day type identified early. So again, this was yesterday's early action. It was kind of choppy here on the opening, but we did recognize fairly early that prices held, and the VWAP, right, the volume trend, was trending higher, and a break above the prior high bar here, prior day's high, began to extend or expand the range. And once this occurred, okay, this was our buy point here, all right, coming out on the breakout, and then subsequent buy points along the way. So again, to summarize, using profile is certainly a way to organize our data, identify what type of day type it is, so we have an idea of what the larger institutional trader is doing or potentially will do. All right, and then we drill down into our execution style charts, looking for our specific trade setups, and we've done some past webinars on these particular trade setups, and again, they are archived on our website as well. All right, so there we trade S&P. The two main contracts we focus on is S&P and crude oil. We have several NASDAQ traders in the room. We do monitor Russell, but we don't really trade Russell that aggressively, simply because there isn't a huge call for it across our membership. And we have several Dow Jones YM traders as well. The method, certainly profile, can be applied to any instrument. Our particular premium and discount system is effective for any contract out there. Okay. The lower oscillator is the Commodity Channel Index, CCI. It's a dual CCI, and we simply refer to it as premium discounts, and there's specific proprietary settings that we use. All right, and it's a dual CCI, so it offers us a view of trend conditions or non-trend conditions, and we use it. I simply refer to this particular indicator as our all-weather kind of Humvee type indicator. Okay, so this is something that I've used for years while I was at the investment banks, and I know several big institution and hedge funds are very similar on how I trade this, since my background is from the investment banks and hedge fund community. There are there's quite a number of people out there that use this type of technique. Okay, maybe not in this specific fashion, but they use the CCI very, very effectively. So that is the core of what we do here, all right, using the profile. Okay, so just simply to wrap it up, all right, we're coming down to our time, and I do want to leave a little bit of Q&A in case others are interested in asking various questions. So before we end, I want to make sure that we extend a special offer, 14-day free trial, and we also have a 14-day free trial to the PTG software suite using Sierra Chart. Okay, and there's your link to the free trial. By all means, jot it down and come in and join. Take a look at what we do. All right, I know there was some various questions and comments about various indicators that we use. It's very difficult to cover them all today, but I will tell you all the the levels that we use. I have taken from my years at the investment bank. So the target master level is all proprietary levels, as well as the stat X zones that we use. The software is specifically designed for Sierra Chart. All right, we do offer it on a couple different platforms, not on TOS. All right, so come on in, take a test trial here. All right, and again, you're free to ask all the questions. During your trial, I get a good, sense of what we do. All right, keep an open mind. Part of being a trader is to keep an open mind. So, and again, many of you probably have some experience with market profile. Again, with market profile, there's not a whole lot of, new spins, that people can place on it. All right, it's pretty basic core stuff, and like I said at the beginning, it's well documented. All right, out there. So this presentation was designed to give you greater insight for those that didn't have the insight, and hopefully it sparks a little bit of interest to learn more. Okay, so we use it actively, and as well as a deep integration of what we do on a daily basis with our members. Okay, and again, there's that free trial. Looks like Patrick posted it, so link up to that as well. All right, and again, I'll leave the floor open for any Q&A.